really good. Was really good. I'm back at it again. As you can see, I got my camera situated. Still a little big, but it is what it is. We'll deal with it. Um, so today's video is going to be on market analysis, understanding and being able to understand and get the full picture, understand the overall trend, and doing all that using multiple time frames. And then later on, I'll have a video on how to trade using multiple time frames and etc. So there'll be multiple videos going into using multiple time frames, but right now we're just focused on market analysis and understanding the full picture and the overall trend. All right, so right now we're in USD Swiss franc. It's been a while since I touched the currency pair. I've been trading index for the past 2 weeks. But besides that, if you haven't watched the first video I put out, which is a beginner's guide, essentially helping you get all the tools and set up everything on the platform, so then you know what you need to use. So then all my videos you watch, you have everything set up, so you're not trying to look around for stuff. But if you did watch that video, you should already have these time frames at the top, which would be 5 minute, 15 minute, 1 hour, 4 hour, and daily. Now you might be wondering why you need all those time frames. They all align, essentially, and they all need to align. Otherwise, you shouldn't be trading that currency pair or that market or whatever you trade, essentially, which I'll go into later on. But you should have all of those, what was that, five time frames. And essentially, they all have their specifics, basically. The daily time frame you want to use to get the overall structure, see which direction it's going. Right? Is it going downwards? So is it in a sell side trend, a sell side move, or is it going up in a buy side bullish move, or anything like that? And I'm talking about overall thing. So you go to the daily, and you can see it's been selling some. For what I'm saying, boom. And this is the daily, so this isn't just every 5 minutes, a few hours. This is days right here, probably like 2 weeks. So once that you see that it's selling, it's on the sell side, then you want to drop down to the 4 hour. Still selling. You feel what I'm saying? And the daily time frame is used for just overall structure. Just what's the market actually doing? A 4 hour and 1 hour time frame is where you want to chart everything up. So yes, you can still you can still set up your chart on your entry time frames, which would be the 5 and the 15 minute, sure, but you want things to actually piece together, which is why you want to put on time frames beforehand. So for me, I chart up everything on the 4 hour, any 1 hour time frame, occasionally the 15 minute if I can't find anything on any of those time frames. All right, and then obviously you also want to make sure that all of those are doing the same thing. So daily was selling, 4 hour selling. All right, 1 hour selling, 15 minute is still selling. All right, and then the 5 minute is also selling. So they're all selling. They're all in a bearish trend because, as you can see, it's an overall downwards movement. So now that we have that in the picture, now we don't need to go jump around to different currency pairs or different markets because, oh, well, this one doesn't align to anything. Everything is aligned. We know everything's aligned because we just analyzed the market. It is in a sell side move. It is in a bearish trend. Therefore, we should only be looking for sell positions. All right. And like I said, on the 4 hour and the 1 hour is where you want to chart everything up. Like we did in 2 videos, a brief description of our first video and then a full video by itself on it. We want to just find the points that match, essentially. So right here. And then if you don't know how to, just do that, extend it to the right. Makes it 10 times easier. Right here, we have a little something. Broke through a little bit here, but ultimately got pulled down, broke through, stopped here multiple times, about like a handful, Stopped here, here, and here. That lets me know next time price gets there, it's probably not going to break through it. It still can because the market will do whatever it wants to do, but it's most likely to reject and reverse. And then you could also put one, I would say, here, honestly, just because slight breakthrough, but rejection, rejection, rejection. It broke through it again, but there was also a news event around those times. So eventually it came back up, reject, 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 broke through, and then went from being support to resistance. So that's why I kept getting stopped up here. All right, so we'll just, and you should only really just focus on what price is doing at the moment. You don't really need everything else to the left. Just focus on what it's doing in the moment. You feel me? Unless you need to look to the left for blind spots. So now that we got that looked at, now we can go to the 1 hour, see if it lines up. As you can see, it's still lining up perfectly. That's good. That lets us know we did something right. You feel me? Or if you want to, you don't got it. Just has to be one of the two. Just because you want everything to align in the time frames that you enter on. Now that everything's set up and everything like that, now you've already analyzed the market. You know it's in a sell side move. It's in a downwards momentum. It's a bearish trend. All right, whichever phrase you want to use, from the daily and all the time frames, but mainly the daily. And you chart it up in the 4 and the 1 hour and or whichever one. Now you can drop down to the 15-minute or 5-minute to enter your trades. Me personally, I do the 5-minute time frame because I'm still a scalper. I'm more of a scalper to intraday because I take trades and I'd rather take trades that don't last longer than an hour, but I'm also willing to hold trades for hours, even a day. All right, so for me, I'm jumping straight to the 5-minute. All right, so judging over here because we have previous rejections off of the other time frames and off of this specific time frame. So now that I know that my setup is straight, now what am I looking for? Obviously, it's in a bearish trend, so I should only be looking for sell positions. That's when the emotion side comes in. You need to be patient. So there could very much be a level around here or maybe even here just because of these rejections over here. So we'll say like here. All right, just because we got a couple of stoppage points in this area, in this in general area right here. All right. So what we wanted to do is we want to wait for a price to push up and come up here to get a bigger sell position, or depending on the circumstances of the market, there are other confluences that can go into that sell position. So you could put a Fibonacci retracement extension like you're supposed to, top of the wicks, bottom of the wicks, and vice versa for a buy side. All right. And then you can wait for a price to retrace to the golden zones. And as long as it's doing what it needs to do within those golden zones and giving you the correct confluences for entering the trade, boom, you can enter straight in there and take it from anywhere between the 38.2 to the 61.8 percentile level and just take it all the way down to here or the next key level, essentially. The reason why you want to make sure that they're all doing the same thing and the markets are all aligned in terms of the trend, overall trend, is because if the daily 4 hour, 1 hour, and 15-minute are buying, so they're not selling, they're not selling, so they're just buying, 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 buying. But on the 5-minute, obviously, we're doing the opposite, and we're selling. Sorry about that. We're selling. All right. So we're thinking, oh, we should enter for a sell position. Woo to woo to woo. But because you didn't analyze the market correctly, you didn't understand and take into the picture that everything else is buying. So if the daily's buying, the 4 hours buying, 1 hour's buying, 15 minutes buying, but the 5-minute is selling, this sell position could very much just be a slight retracement in the 4 hour. So let's say it's buying, but the 5 minute is selling. This slight retracement before it starts pushing back upwards is a huge downwards push on here. But once it starts pulling back up in the right direction, which would be a buy move, if the 4 hour time frame was buy in a buy move, then you would get stopped out. Better example. So let's say, all right, price retraced here, starts showing you some sell side pressure, some rejection, so you enter for the trade here. All right, stop loss above the last low, and take profit to the next key level, which is here. All right. You would think, okay, it's selling, we're good. But because the every other time frame is buying, this slight sell move that you're getting, oh, it looks great. Guess what? Reverses and starts heading back up. Why did it do that? Because this strong downwards momentum and bearish trend right here, this slight trend right here, was only a retracement for every other time frame. And once those retracements were finished on those time frames and started heading back in the direction that they're supposed to be going, which is buying, guess what? So did the 5 minute, and it stopped you out when you was in a sell position. That's why you want to respect the trend. You want to respect the market. That's why you have to understand and learn market analysis and understanding the overall trend. Otherwise, you can get caught in that situation. You don't want to be selling on a buy side market because right now it's selling. It's giving you sell side moves and etc. Because that sell side move on the 5 minute could be a slight retracement on the 1 hour. And then once that 1 hour starts going back in the correct direction and continuing, let's say upwards, so will the 5 minute. And guess what? You get stopped out and you're like, oh, do I need to change my strategy? What did I do? Maybe I should quit. No, you just need to understand market analysis. It used to happen to me all the time. Oh, well, it's clearly selling. Why did it reverse to stop me out? Because I didn't analyze the market correctly. Whether I knew or didn't know that the market's overall trend was selling, or most of the time frames are all selling, and I entered for a buy position, I didn't analyze it correctly, or I was being emotional and greedy, and guess what? I got stopped out. Simple as that. So you want to always respect the trend and respect the market. You want to use that daily time frame to get an overall structure of what it's doing. You want to use that 1 hour and 4 hour to chart everything up. And you want to use that 5 and 15 minute to enter in your trades. And then you want to use all of those time frames combined to see what the overall trend is. Because the daily time frame for the past 2 weeks has been selling. You go to the 4 hour, selling. You go to the 1 hour, selling. You go to the 15 and the 5 minute, selling. Therefore, you should only be looking for sell positions. All right, sure. Oh, well, I don't want to wait for it to get all the way up here, so I'm just going to catch the buy position. You can do that, but you're going to lose money, most likely, unless you have certain things that play into factor, like a market shift, which I'll have a video on it on its own. But essentially, a market shift is in the moment. It allows you to basically enter in the opposite direction that you thought the overall trend was. But yeah, that's just it. That's market analysis, understanding the overall structure and trend, and how to utilize multiple time frames into getting a good chart set up using all those time frames, so then you can truly understand the full analysis, get a full analysis and understand the whole structure and overall trend. So then you can take those big trades like I just placed right there. And all you got to do, and you ain't even got to spend that long. All you got to do is click sell. All you got to do is click daily. Oh, it's selling. Click 4 hour, selling. Quick 1 hour, selling. Chart on the 1 to 4 hour, and then enter off the 5 and 15 minute. And boom, just like that. You got the full analysis of everything. You understand the whole structure. You have seen the whole trend. All the time frames are aligned. Therefore, you are eligible to trade in this market without possibly getting caught in a reversal or caught in a retracement or pullback, which causes you to lose money because not all the time frames were aligned, or not all the, or all the time frames were aligned, but you decide to enter in a position opposite that disrespects the overall trend. But yeah, so that's just all that. I'm gonna have a video on its own about market shifts, and I'm also have a video on its own just more on the using all those time frames and how to trade using all of those time frames, being able to go back and forth and essentially see to get what my mentor would say, sniper entries, perfect entries, super, so you can have super tight stop losses, minimize your risk, etc. So I'll have videos deeper on those two or three, I believe two concepts, but overall analysis and understanding the whole structure and trend, all here. Using all those time frames, you should make sure all those time frames are aligned, making sure that they're all doing the same thing. So if one time frame is selling, they all have to be selling. Otherwise, this market is essentially invalid. You should not be trading it because you'll be risking more money than you could possibly make. Therefore, you move to the next market on your watch list. Oh, all of these time frames are aligned. Beautiful. I'm going to use this market, and this is what I'm going to be trading on for the day. You feel me? Just like that. But yeah, that's it. Like, subscribe, go to the gram, whatever you want to do. I'm trying to help some people out. I'll see y'all.